Good evening, good afternoon, and welcome to the Accendo Trader Group. This is our weekend wrap-up trade plan for August 22nd, 2009. Blog.Accendo Traders is our website, and we put together these little video trade plans each day to help traders be successful in the market. A successful trade plan has you looking at your watch list, and your stops are adjusted based upon the trading action of the day. You want to see what's coming down the pipe as far as news and earnings that can affect your trades. Check some of the expert blogs that are out there. Watch the Accendo Traders videos. Look at the sectors. Check the indexes. You always want to scan for new trades. Set your alerts. But most importantly, by having a trade plan, you have time to spend with your family. So let's look at the week that was. The Dow ended the week up 184 points. You can see we were up for the year. The S&P ended up 22 points and Nasdaq ended up 35 points. And again, all indexes are up for the year. What's interesting about that is that for the past couple of weeks, we've been kind of range-bound trading, kind of not doing much. But volatility returned back to the market this week. Starting off by what happened on Monday. The market was down on Monday by some of the economic news that came out of Asia. And the thing is, the data that came out did say that they were growing, but I guess some people didn't like what they were seeing, and so the economic data out of Asia as far as their GDP was positive and yet interpreted negative. And that's why it's real important that sometimes, you got to sell the news. And I think that's really kind of what happened there. And the market opened low, closed lower. But what was important, and this is how you can kind of tell how the market's been, is that the buyers immediately came back in and bought the pullback. So buyers are still buying a pullback, so no matter how much the shorts want to push this market down, the buyers are coming in and bringing it right back up. So remember, the trend is your friend, and you might want to consider doing the same thing. But again, make sure you have a trade plan and execute that trade plan. We had mixed data this week. What was interesting about that is that Friday, we ended up this week on Friday off of better than expected existing home sales, but at the same time on Thursday we had negative housing news. Housing start was lower than expected. Housing permits, building permits was lower than, but the existing home sales came in positive on Friday. So again, what that's kind of showing is that traders are ignoring the negative news. Again, showing more bullishness, more up move. So again, consider buying the pullbacks until the trend is over. The trend is your friend. This week, as far as economic data, we don't have a lot going on Monday, but we do have the S&P Case-Shiller Home Price Index on Tuesday. But what's really big is on Thursday we have the second quarter GDP, and that certainly will have some market moving potential. And personal income spending on Friday, but that second quarter GDP on Thursday is really the biggie. As we head into Monday, we don't really have any economic news, and we don't have any really earnings to be concerned about. We really don't have any earnings concerned about for the whole week. We do have Dell this week, and we have some retail earnings coming out, but for the most part, we don't have any earnings that's going to move the market one way or the other. So let's go ahead and take a look at some of our market internals and look at some charts. Alrighty, so we're going to start off by looking at some charts, the three major indexes, the Dow, the Nasdaq, and the S&P 500. So here we are. We have the Dow Jones, beautiful move in July. As we talked about, the beginning of August has been sort of a consolidation. We came down to the 20, and now we've made a new swing high. When we look at that compared to our long-term moving averages, we can see that we're well above the 100 and 200, so that's great. That certainly is bullish. As far as our Bollinger Bands, you can see we did a beautiful job walking the bands, started to consolidate, came down, tested the 20, moving up. And you can see with ADX, our strength of trend is still good. As we consolidated, we started to show a weakness in the trend, but it's starting to curve back up. That's certainly good. Our pullback indicator is not showing us anything. Let me switch that back. Pullback indicator is not showing us anything. Snapback's not showing us any concern there. And our TSVs are showing a continuation of the up move. Now, when we take a time and break this back out and look at it on the weekly, so let's go back to our short-term moving average and look at this on a weekly. You can see that we're above the 50, and we've just broke above the November highs of last year. We actually have a little bit more to go. So that's one place we should be looking at is the November highs of last year. That's a likely target. And then we will test the October highs of that because it is a straight candle down, so there's nothing that's going to stop us in between that. Let's look over the monthly, see if we see anything different. Monthly, no, we don't. We can see that the 20 moving average is matching up with that weekly November high. So again, that looks like a good place to go. And then if we break that, going up to the 50, and that tests the October high. Let's switch over to the Nasdaq. And we can see the same thing. The Nasdaq was leading us, starting to consolidate a little bit. Actually broke the 20 moving average and has taken up, made a new high. Not as strong volume as far as above average volume. Likewise, we're well above the 100 and the 200 moving average. Bollinger Bands, same thing. Walked up to the Bollinger Bands, consolidated. Although we did test the bottom band, the lower band, and now we're breaking higher. Our pullback indicator is not showing us anything immediately. Snapback's not showing us anything. And our TSVs all are pointing higher. As we go back to our short-term moving averages and go to the weekly, above the 50 moving average, and we're above the November highs, so we're already looking towards that October highs for our target on the weekly chart. Let's compare that to the monthly, and this is the same thing, looking at the October highs for the Nasdaq. Now moving on to the S&P, go back to our daily, beautiful chart, look at our above average volume, and same thing going on here. Well above the moving averages, Bollinger Band walked up, consolidated, came to the 20, now pushing higher. Pullback's not showing us anything. Snapback's not showing us anything. And our TSVs are heading higher. Go back to our short-term moving averages. And let's check the weekly. Already above the 50 moving averages, already above November highs. So October highs look like a place to go for there. Let's check that with the monthly. And the 20 is right there again with the 50 target. So overall what we're seeing is looking at the November highs, whether or not we've tested those or not, and then the October highs as a possible move if this move continues higher. Okay, as we look at our market internals Excel spreadsheet, I'm not going to spend a lot of time on it today because obviously when you have a 4-day up move, the internals are strong, and that's what we see here. Any number above 50 as far as the breadth on the NYSE and Nasdaq is bullish, and we can see on all 4 days we're above 50 with a very strong bullish 93 for yesterday. As we go on, I'll explain this a little bit more, but internals are definitely strong. In addition, with market internals, I'm spending a lot of time, not going to spend a lot of time on sectors because as you see me kind of scanning through all the sectors, what do you see? Nice bounces off the 20 or the 50 moving average. Most of them are testing new highs at most recent swing highs. So the question is, are we going to get a continuation of move? We all know how important the financials are, the energies are as far as the S&P 500, and they're waiting. And so if they're moving, everybody else is moving. But you know, you can see again, most of these are at swing highs, and will we get a continuation of the move? Okay, we're going to go to our passage of the day. We're using the book Trading in the Zone by Mark Douglas, and we're talking about the market's perspective. In today's passage, please pause it, read it at your leisure. I'm just going to sum it up to say that what separates good traders and bad traders is the ability to focus on the now. You cannot allow yourself to be affected by past trades, good or bad. You have to focus on the opportunity of now. And bad traders, you know, are not able to push the mouse button because they had bad trades in the past. Where professional traders are able to click the mouse button because the opportunity has presented themselves. You have to stay focused on what's going on now. What opportunities are presenting to you each and every day, each and every minute. and not allow yourselves to be controlled by your emotions. Make adjustments to current market conditions, have a trade plan, have your entries and execute the trade. So I want to thank you guys. Our blog is blog.accendotraders.com. You can follow us at Twitter at twitter.com/AccendoTraders. And I recommend that you spend 5 good minutes at this YouTube video by the School of Trade. It's a great video on futures, how to develop a business plan, the advantages of trading futures. Spend 5 good minutes at this YouTube video on trading futures. Thanks, guys, and I'll see you next time.